Right. Now, can we go back to the share? Okay, right. Here we go. So liquidity. This is all about liquidity, the importance of liquidity, what is it, and how it pertains to the crypto market, particularly at this time. So really, really liquidity is everything to any particular trading or asset class, any market, any financial market. Liquidity is basically the grease that greases the wheels. And so basically, what is liquidity? Essentially, it's money on tap. It's readily available money, which is basically basically ready to be used. And it could also be described as a currency, as the activity of the currency. So the more it's transacted, the more liquidity there's going to be, because it means that it's got basically it's got deep liquidity, which really also refers to the fact that there's a lot of money ready to be deployed, and that comes from the volume of transactions around that currency. And basically it's all interconnected. The amount of liquidity is the popularity, if you like, that's another way of looking at it, of that currency, and its adoption, and the sheer belief in that as a safe, if you like, safe haven. I think the US dollar is probably the most liquid currency out there at the moment. That may be slightly declining, could be rapidly declining in some people's eyes, but it's still the most liquid currency when you compare it to all the other currencies. The US dollar euro trading pair is probably the most liquid trade as well. The euro being, obviously of a significant size, and the USA is a significant size, and their currencies are probably the best of a very bad lot. And liquidity, it could be said that liquidity is declining because of debt. Like the interest rates are soaking up liquidity. And it could be declining because of the advent of the BRICS nations, particularly China and Russia and India, deciding to trade amongst themselves. So as they do that, and they trade in their own local currency, that is going to put a damper on the size of the liquidity around the US dollar. The gold market is also another highly liquid market, the trading of gold, the gold, paper gold predominantly. Obviously, gold itself, physical gold, is not quite as liquid, but it is quite easily convertible. There's always going to be someone that will take your gold or your silver or any other precious metals for that matter, and it just means it's not immediately at your hand. You still have to do the conversion. Property assets are illiquid. In other words, you can't take your property and trade it for something else that you need. You need the liquidity of currency in order to do that. And so property, you could say the liquidity is locked up in the property itself. And so when you sell a property, then you're essentially making it liquid. You're turning the bricks and mortar into a liquid currency. So when we look at crypto and liquidity, Bitcoin has become highly liquid. Bitcoin is now become a very liquid crypto. It's the most liquid, and it's even rivaling gold. And it's really exploded since the ETFs were released, which was only just over a month ago. And so the amount of trading going on with the ETF has brought a lot of liquidity to the Bitcoin itself, the Bitcoin market. And Ethereum, I'd say Ethereum is fast rising in those ranks as well. And when Ethereum gets its ETF released, you can just imagine what's going to happen. Much the same as what's happened to Bitcoin. I think a lot of the big institutions, they are now piling in on Bitcoin. There'll be a lot of them will be watching the Ethereum ETF, and that's just going to create this constant cycling in of money into those assets, and then it's going to translate to the actual crypto market in a huge way. Stable coins like USDT, USDC, and others are also great examples. They're highly liquid, and stable coins are highly useful for that reason, to easily buy in and buy out, sell out of crypto. So the stable coins act as a kind of glue between the cryptos. And the entire crypto market is becoming more and more liquid by the day because of what's happening in Bitcoin and Ethereum and the stable coins as well. They are bringing a lot of liquidity into the market. Every time they mint more stable coins, which is really just like printing more money in the traditional market, it is pulling a lot more liquidity into the whole entire crypto market. And a lot of it will find its way first initially into Bitcoin, but then as Bitcoin's price rises, that liquidity will then start to spill over and it will start to find its way into smaller coins, the altcoins, if you like, the alternative coins, and it's just going to keep growing. XRP and the ISO tokens will be bringing a lot of liquidity, in my opinion, to the global payments market and the entire financial market, particularly once regulations are set. At the moment, they are doing trades, but it's on a fairly limited scale. It's still up there in the tens and tens of billions of dollars, but that is just a drop in the ocean to the global payments market is worth trillions of dollars per day. JP Morgan alone is settling around $10 trillion a night. That's just JP Morgan. So this market is huge. And this is why I believe the price of XRP and the other ISOs are all showing fairly minimal, modest returns, because they are not yet released. They haven't. It's like someone said to me, it's like driving a Lamborghini around on a potholed road, on a very badly made road. So when these tokens are released into the market and regulated, wow, then it's there's going to be a lot of liquidity in XRP, and XLM as well, which will also be doing more micro payments and retail payments, while XRP will be doing much bigger bank settlements and that sort of thing. But again, that's going to be another huge inflow of liquidity to the entire crypto market. So as these other tokens start joining Bitcoin and Ethereum, it's going to be get very, very crazy when the masses suddenly wake up to this fact. So you could say that in simple terms, the current restricted supply of crypto, because the banks, let's face it, the banks are trying to plug that liquidity flow, especially to us, not to the institutions though, only us. The banks are preventing us from bringing more liquidity into the market. But as that supply gets unleashed and as the demand goes up, then the price will increase. The price will increase massively, and that price is going to increase the liquidity massively. So they two go together. The higher prices are going to create more liquidity. More liquidity is going to create higher prices, but the supply restriction of being able to obtain crypto is when that is unblocked, and when the masses start buying up like crazy, there's going to be a massive supply demand equation. That's simple economics, and then we're going to see huge movements right across the board. So XRP, it's one of its main superpowers is liquidity, on-demand liquidity. That's what ODL stands for, because you must have a neutral currency between other different currencies. You can't just convert, when it comes to in the digital format, you've got to have something in the middle. And at the moment, that is done essentially it's done by SWIFT in a kind of manual way. If you're converting US dollars to, say, euro, it goes through SWIFT, goes through the centralized control. They have to hold both currencies, and then they're swapping the USD for the euro, and it's done over a period of days. Now, when it's done digitally, they will send it to XRP. XRP will then do the conversion, all done on their decentralized exchange in a matter of seconds. And then the other currency will end up at the other end. So that is going to be hugely important for doing cross-border payments and foreign payments. And all XRP holders will eventually be able to submit their tokens to that liquidity pool and earn a yield off those transactions. There will be a very small yield, and they gear up, and transactions have been done at thousands of transactions a second. It's going to be quite eye-watering. That's what the automated market maker is, the AMM that I have mentioned before. The automated market maker is going to enable that to happen. And and so instead of staking our tokens in a traditional way, in a decentralized finance way, and earning a yield, we're kind of like, we're submitting we will be able to submit our tokens to the pool, to the on-demand liquidity pool. And I think that'll be the safest place ever that you could put it. It's not going to be completely without risk, but it'll be very, very small, very tiny risk. I think the risk on a DeFi platform will be higher. So this is absolutely groundbreaking when you consider that everyday people can earn from the global monetary system itself directly. We've never, ever been able to do that before. We've never been able to earn from the fees from the movement of global money. That's how big I see XRP, is eventually will be like a digital reserve currency or a digital, it'll be a major token, a major currency for the world, and especially with the advent of the BRICS and the fragmentation of the current centralized system. It's going to even be more important. And then you throw in things like CBDCs as well, or what could be bank digital tokens. It's even going to be even more important as an intermediary between all of that. So there'll be the CBDCs, there'll be bank tokens, there'll be stable coins, there will be cryptos. All these different currencies need a neutral currency to make them work and to be able to do the exchange. So I hope that sort of gives you an idea of why it might be a bit slow in getting into the starting gate. And staking rewards, traditional staking like on the Flare network, that will also bring a lot of liquidity into the crypto market. So we've got quite a lot to happen before it really starts to gear up. We've been mainly talking about just individual tokens and general liquidity. But what about what other ways can we bring liquidity into the crypto market, especially if banks are acting as gatekeepers and trying to preventing that money from coming in that way? Well, airdrops are becoming huge. They are literally bringing billions and billions of dollars of liquidity into the crypto market, and it's bypassing the banks and the gatekeepers. It's literally being dropped into our lap, into our wallets. You could say it's free money that's dropped out of thin air. And originally, a lot of the airdrops that I participated in the early days, they didn't go anywhere. These were quite cheap-ass projects. They were just trying to, find a free, easy way to try and stimulate their project. And I've got a couple of airdrop tokens that are still alive today, but most of them all went down the gurgler. But now that has completely changed now. There are these huge, massive airdrops happening with projects that are coming with killer use case, which is the key here. They're coming with key utility. They're coming turbocharged with VC money, the whole kit and caboodle. And so this is literally pumping up the crypto market from within, and it's all then it finds its way into the market. A lot of people will sell these airdrop tokens immediately, but that doesn't matter because it's literally growing the market from within. So that is amazing. There's been projects. There's one that's just happened called Starknet. There's another big, massive airdrop called Dimension. A lot of big airdrops are happening on the Solana. Solana blockchain is on fire because they are bringing amazing projects for the people to that blockchain. And they are giving out airdrops like candy. And a lot of these projects are really solid. And in the gaming world, they also love to do airdrops. You can play to earn in the gaming sector. So that's bringing in more liquidity that way as well. And as I've mentioned, the gaming market is huge, especially if you add in video, like video gaming, traditional gaming with the gambling gaming side of things, horse racing, excuse me, traditional gambling. There's massive blockchains based around casino type coins as well now. So they all have airdrops as well. Just about all sorts of projects now are bringing out airdrops. And as I say, they're getting very, very sophisticated, and it's creating massive interest. Then you've got loyalty and voucher systems as well. Like Starbucks are giving away crypto if they buy some of their products. A lot of these companies are giving away tokens as a loyalty for buying their product, or you can get vouchers like we used to get. If you get flyby points, and you have what was the other big one? There was another big sort of loyalty program. I forget what it was, but they were in a lot of stores, and you'd get these points, and everyone was trying to collect the points. Well, what a lot of the big firms doing now is they're giving it away in crypto. So all of this is bringing massive amounts of liquidity to the whole market. And so crypto is gaining hugely because of this. And the Bitcoin, and soon to be the ETH factor, is massive for liquidity as well. Because as the ETF is creating the interest, then more and more people are buying the actual Bitcoin. Then as everybody's doing this, the price is going up exponentially. Then that price is translating into liquidity, which is then finding its way out into all the other tokens. So it's like a domino effect coming from four corners, and it's all dovetailing in upon itself. So you've got liquidity coming from the outside, you've got liquidity coming from the inside. And all of this is happening without the banks. It's going around the banks. This is what I find particularly exciting and pleasing, to be honest. So then you've got the real big kicker. The big institutions are coming. That means the big liquidity is coming into the market. These institutions are now pumping liquidity into crypto like crazy. And soon we're going to see a tidal wave. It really is going to be quite phenomenal. Just bear in mind that these initial big runs that are coming, there's going to be a big drop on the backside of it, but that'll be temporary. And then the next run up will just be even bigger. So we just have to understand the cycles. That's another thing again. But anyone's watching this for the first time, because we do record it, bear in mind that we don't believe everything goes up in a straight line forever. It just doesn't happen. Things that go up in a straight line, it will correct, because there's always going to be profit taking. But if we understand the cycles, we can take profit in the peaks, we can buy back in the troughs, and then we can just even expand our portfolio even more and wait for the next peak. So the Federal Reserve and their money printing is also coming. It's on the cards. And so this is macro, this is like on a big scale, this is the macro liquidity that's going to get pumped into the market via the money printing. Like what we saw in COVID. Initially when COVID hit, everyone panicked, and the crypto market and the whole entire market dropped because of the fear. But then once they started doing once the government started issuing out their free money, and these stimmy checks and all that, and around the world, you notice how then the crypto market went crazy, particularly in 2021. A lot of that money was the money that was being paid out for people to stay at home. And so that is liquidity on a global macro level. You cannot stop this train. It really is starting to gain speed now. And so we're now coming into another cycle again where there is going to be more money printing. At the end of the day, they're getting backed into a corner. I will explain that best I can in the next slide. But what this is going to do is this is going to affect Bitcoin and Ethereum even more, as well as a lot of money will go directly into the other altcoins. And so this is like really, then this is the big stuff. And the ETFs, as I've mentioned again, I mentioned before, the ETFs have sparked off a huge interest from the institutions, and it's not going to slow down for possibly for years. And then the institutions will also be putting their money directly into the crypto market. They will be putting them via their salesmen. They'll also be putting it into the ETF, but a lot of money is going to go straight into the crypto as well. The savvy ones will know to hold the real crypto, not just the paper ETF. And then you've got all the venture capitalists as well. And then you got all of us acting as like mini VCs as well. So we're going to look forward to all of that. So really, it's like a perfect storm. Really is going to be like a perfect storm. Now, there is such a thing as the liquidity index, and I've got that actual graph last. But within this, let's talk more about the actual Fed and what I think is happening there. So the Fed has been in a tightening cycle for the last year or so, and tightening means they are taking money or liquidity out of the market, and this usually comes. This is why they're raising interest rates. They're raising interest rates. As they raise interest rates, they usually tighten. They take money out. So this is basically to so-called reduce inflation, although I don't believe the inflation is being consumer driven. I think it's been driven by the fact that the debts are so high now, and as they raise interest rates, that creates the servicing of the debt, which creates the price increase, because everyone has to increase their prices because their debt, the debt servicing, the interest on the debt has gone up so much. And it's also supply chain. But by raising interest rates, they are also protecting their US dollar. The more people will buy the dollar because they're going to get a better return by that interest rate. So that's one thing that's happening. But now they're being really forced into a corner to cut rates because everyone's getting so hurt by the interest rates that they're basically going to have to cut them because it's hurting everyday people, but it's also the debt servicing, even by the bigger institutions now, is getting pretty high, not least of which is the US government themselves, where their debt, their interest on the debt is over $1 trillion now, $1 trillion a year to service their debt. So it's getting completely out of control. And And as I said, I reckon inflation has been caused more by the rate hikes than by interest rates. Inflation has been caused more by the rate hikes than sorry, I've got myself in a bit of a tangle there. The inflation is not being reduced by the rate hikes. That's what I mean to say. So it's really a case of the tail is wagging the dog, and that's the way I see it. So inflation is really a result of bad policy and supply chain issues as well. That's in my view. COVID really triggered that off because no one is really spending. So why is inflation going up when basically people are really well, not spending as much anyway? And the Fed need an excuse to start printing again, and therefore increasing liquidity into the global financial system so that they can, people are getting pretty restless and they need to sort of give us a bit more stimulus in order to be able to, so we can pay our rent and buy our food. And most countries follow the Fed. So whatever the Fed does, other countries follow. When they're raising interest rates, they're causing problems in the other countries. And when they start cutting rates, then those countries can start relaxing as well. And they can start cutting rates and printing money as well. But it's really hard for other countries. They can't really start printing money while the US interest rates remain high. They just can't do it. So this pressure of interest, debt, inflation, money creation is all really a big trap, and it's just making us go round and round in circles. So they're really bouncing the ball from pillar to post. They raise interest rates to a certain level, and then they just relax it and then start printing money, and then they go back to raising interest rates again and tightening. So it's really a very one-dimensional, two-dimensional at most strategy, and something is going to have to break. And that is the sign that we're close to the reset now. That this situation cannot keep going on. Something has to break. And that is basically why they need the reset. Because no matter what they do, it's causing major stress to the system, just at different kind of either the dollar is going to fall through the floor, or the economy is going to fall through the floor. Either people are getting hurt on Main Street, or people are getting hurt in the big institutions. And basically, it's almost impossible to keep everyone happy now, or anyone happy for that matter. So this is like, it's going to be like a death spiral. So really, this is the last mile of the fiat currencies. And with that in mind, that's why the big reason why crypto and blockchain is going to rise. It's going to be the phoenix that rises out of the ashes of this broken, collapsing system. So, that's why we just have to hang on. I know many people are fearing the reset, but for us, it's going to be our Mecca. It's going to be our Valhalla. And, this a lot of people won't see that. They won't realize that. They don't see what's happening underneath the ocean. They're just looking at the waves on the ocean. They look at the prices as well. Those who are in crypto, most of them don't really know what they're doing. They have no idea that it's actually the development and the positioning and the development and the partnerships and all these things that are happening below the surface, which will eventually translate into price, and the price will be going up because the demand is going up, and that's going to create a massive upswing in the liquidity right across the board. Well, not across the whole crypto board, but bear in mind a lot of cryptos are going to go when regulations hit. And regulations is another key factor that's going to bring in a huge amount of liquidity, because then the masses are going to then see that it's actually crypto is here to stay and it's been inked into law, and these are the regulations. So that's really the final phase. When the regulations come in, it's game over, and a lot of the masses, it's going to be a lot of the prices are going to be beyond their reach to make any as meaningful gains. They'll still be over the longer term. There will be meaningful gains, but they would have missed out on all the cream and the icing on cake. And we're in the box seat where we can just basically we're going to be in our boat, and the rising tide is just going to rise us up. So that's going to be a very exciting and I think that's 2025 when the real action starts. This year is going to be cool, but it's next year that I believe is going to be the real off to the races time. Now, also, I've got this this index. I just wanted to show you this liquidity index. It's what it's called. And I will just put it into my browser. So this is the graph showing the global liquidity and where it's all at. And from what I can tell, the yellow line is the liquidity. So that's the liquidity that's pumped into the markets from the central banks. You could say that that's what the central banks are holding on their balance sheet. I think that's their money that they are holding. And you'll see that how it's taken this big dip. A lot of liquidity coming in here in 2001. Around this is November. Sorry, yeah, that's November 2021 there. And that was the peak of the last bull run in crypto. No surprise. So the liquidity index is following, the crypto market and the stock market as well is following this liquidity. And this is all the money printing they've done. But then this is the tightening that's happening here. And I believe this is going to start going big time up very, very soon. Probably mid to later this year. You're going to see when they start printing money, that liquidity index is going to shoot up. And this graph underneath with the colored, I believe that is it's called the repo market. That stands for repurchase. And that's where the banks are borrowing amongst themselves, or I think they're borrowing from the Fed. And that also is pumping money into the banks and into the big institutions as well. And you can see how pretty much it's had this big calamitous crash here, which means that they're running out of money basically then. And then they're printing money and for themselves basically, and their repo market has gone up, and now it's sort of bobbing up and down. So basically that's that's another thing that I don't fully understand properly. All I know is it's just between bank to bank, big institutions, and it's money that doesn't come anywhere near us. And and the interest rates on that are high, and that's where a lot of banks are parking their money because they can make a better return there. But it's another sign that it's just getting way out of hand. Then you've got to look at the bond market as well. The bond market interest, they call it the interest rate inversion, has happened, where you can get a better interest rate short term than long term, where you should be the other way around. You should get the better rate over the longer term. But that shows that they've got no confidence to park their money and buy bonds for the long term. They're simply trading and buying and selling in the short term, which means that they basically know what's coming. So, that's, I think, very, very telling. The bond market is how they bring money into existence. They're basically loaning money into existence, which is also only increasing the debt. So it's a literally accelerating the ambulance off the cliff, and we're really, really close. Possibly, when I say really, really close, months to maybe 18 months away before there's something big is going to happen. And it could be any time, especially with the American election coming up. That is a real wild card as well. And it's another reason why we could see a lot of money printing that election, because the Democrats are going to do everything they can to try and sweeten the voters with free money. And but then it could go the other way if they clearly look like they're losing, and it looks like the Democrats are going to win this time. Sorry, the Republicans, if they look like they're going to win, then there could be an event happening this year, because the Democrats are going to need to do something to try and lock people down again and distract them from the real problems. Big, big problems, huge systemic problems, major infrastructural problems. And so they have to pull an event to try and, pull the wool over our eyes. But I really don't think that is going to happen this time. Too many people are awake, and it's going to be chaotic, but in a different way, I think, to COVID. It'll be chaotic because a lot of people will be pushing back and they won't be complying, or they just know what's coming, and so they're going to let these people fall on their own sword. So that's basically all what I've got for today. Any questions on that? I see there's a couple of questions in the chat. Is the XRP liquidity pool the Flare network? No, it's completely separate. Flare network is a way where we can stake tokens effectively, and the liquidity pool is for the global money supply. Great to know about the airdrops. I know, but I avoided them, of course. Now the tide is good to keep. Yeah, no, it definitely, the tide has turned. They know that they can't be giving out crap, so they're giving out quality tokens on quality projects now. And really, really, I do really believe you should have another look at it, especially if you've got the time. I've signed up with an account called bankless.com, and they've got their airdrop hunter. So you can pay $22 a month and get their airdrops. Or there's also websites purely dedicated to airdrops, airdrop alert sites, and there's a few of them now, and you can find those online. I don't have a recommended list because the ones that I'm looking at, they've already happened. What you've got to do is you've got to get onto a website where you know in advance. Then you've got to hold their token. Bear in mind, you've got to buy the token so that you can get the airdrop, because they're only airdropping, they're not airdropping it without, you holding the right token so that they can airdrop it on. So, so you've got to do a bit of research and a bit of work to find out what's coming in advance. And then you've got to do your work of staking them or holding them. You don't even have to stake them in many cases. You can just hold them on the right wallet or the right platform, and then they will give you a percentage based on the amount of tokens you've got. What platform will the liquidity pools be on? Well, it'll be on the XRP ledger, but it hasn't happened yet, and there's nothing much to do at the moment. It's all talk at the moment, so we just have to wait. And it's going to be a whole process. It could be quite a complex process. So they have no idea what to do because they haven't yet sanctioned it. So it's just in the process. And they have to vote and all that on it. And the voting apparently has become yes, but there's nothing to do at this point. Just stay tuned, pretty much. Yeah. Yeah, I don't know either. Well, we now that I've got Gerald back, we can put more energy into marketing. We're changing our whole platform. We're changing the whole entire structure. I'm going to get back into doing free webinars, helping people at the beginner stage. And so we're starting that on Friday. And I've also I'm now a member of Web3 NZ, which is dedicated to the decentralization protocols in New Zealand. And now they've given me the ability to be a promoter of their site, and for that we're going to probably get some extra attention. So I'm putting a lot of energy into marketing and getting in with all the movers and shakers, basically, so that we can
oh, exciting.
yeah, very.